May 26th. And this, of course, the video log takes 30,000 to 1,000,000. It's been a week since I made a video, so hopefully this one makes up for a little bit. Been busy, okay? I'll walk you through the account. I'll show you some of my positions, how they're doing. I want to talk about the market in general, and also I want to show you a trick or a little tip on how to increase your margin on Robinhood if you should so want. So first of all, take into the account. So this is my account. I'm sitting at $83,797. I have not put any additional money into this account. If you want to see the week performance, this is what it looks like. This is the month. All right, plus 8%, minus 0.76 on the 3-month, and the year is actually up 14.64%. So that's not bad for having gone through this pandemic dip. Whether or not these gains will continue is to be determined. This, of course, the all-time chart. You can see clearly the leverage mistake that I did here. I was doing pretty well up until February 28th, March 6th, but then I went real heavy because I thought we hit some kind of a bottom, but of course I got hit real hard, and so I've been recovering ever since. I'm pretty confident I'll be fine though. So my all-time and my 1 year is still doing pretty much better than the market, which I'm very happy about. I want to show you the account tab here for a moment because I want to show you how much I've deleveraged. This number was not 12.45% just not too long ago. All right, I had like 40,000, 45, 50,000 in leverage, just trying to swim out of the hole that I dug myself into. But now I'm deleveraging slowly and steadily. Hopefully, I'll get rid of all these $11,000, $12,000 of leverage and make that percentage really small or non-existent. Total market value, these are my total assets under management, right? So $95,000 worth of options and stocks and stuff like that. And some of that money isn't mine, right? 12,000 of it isn't mine. So I'm operating with Robinhood's money and I'm paying interest for it. So here, this chart doesn't really show you much. This is just kind of the visual graph of the breakdown of my holdings, but it doesn't really do much because I buy and sell a lot, options expire, etc. It doesn't really do much, but maybe the equity will help just to see how much equity I have in each. My top 2 positions, Cameco and Apple, are doing pretty well. So here it is by equity, and total return, like I said, you don't want to look at it too much, but Wheaton Precious Metals has done pretty well for me, even though I've sold quite a few shares of Wheaton Precious Metals as it's going up. And Cameco's been a champ. I mean, I've been doing this, selling puts and calls options against Cameco for a long time now, and it's been working just wonders for me. It fits my money-making style really well. Okay, so now I don't know if I'll run through the account really quick. You can see the option position here if you really want to know exactly what I'm invested in. You can see the option position, like RSX, $20 call, and you can see the expiration date underneath and the number of contracts underneath. So just scrolling like this, you can pause it anytime on your browser and try to figure out what these positions are. I don't want to spend too much time going over them, so that's why I'm doing it like this. So some of the notables, of course, I have a big option on Apple. It's called a LEAP because it's a long-term, equity position and option position. It's down $158. Apple is also down $151. It's actually down more than Apple today. The delta is really climbing up on this position because it's so far over 300 now. It's going to be almost a 1 delta if it's really far over 300 and near expiration date. Realty income is the position that I've been trying to accumulate quite a bit, and it's appreciating a lot today. So it's up 6.4%, and I have put options sold at $42 and $40, so those are going to expire worthless probably unless there's a big crash here. I was hoping to accumulate more of O, but it looks like I'm just going to be reinvesting the monthly dividend that he gives. I only have $5,479 in it right now. I was hoping to put more into it. If one of these contracts triggered, I'd have extra 100, 200, 300 shares or more. But I'll settle for 100. That's fine. The contracts can expire worthless. I'm okay with that. So moving on, NYMT up $100. RSX, that's the Russian market, up 100. FAX, just South Asian market. It's pretty steady. Pays a good dividend. Dropped a lot. Wind precious metals talked about earlier a little bit. All of the precious metal stocks are definitely taking a breather. Maybe a temporarily bear market soon. So I'm not sure. Uranium stocks are really going strong. I wish I didn't sell as many call options on Cameco, but I wish I was selling them now at a much better price. But the fact of the matter is that I'm going to be saying goodbye to a lot of these 1,500 shares of Cameco that I own. They're all contracted out. And then DEM, URG is another company, uranium company. DEM is an emerging market dividend fund. It's up 100 and some dollars today. Visa's up 40. NCLH is Norwegian cruise liners up 228 for me today. And I also have a call option against these 100 shares as well. Rio Tinto down a little bit. SBRA, it's a REIT, healthcare REIT. LUV is Southwest. And EW is just the UK market. Okay, now with that said, I can maybe compare the performance of my account versus the S&P 500, see if I'm doing okay. I think the S&P 500 has been doing really strong over the week, so I don't think I'll be able to beat it. But it looks like almost 2% I'm up. And let's check out this SPY. The SPY is at 1.21. Okay, so I'm beating the market over the week. I'm also beating over the month, 3 month, 1 year, and probably 5 years. My account hasn't been alive for 5 years, but I bet it would beat over 5 years. Okay, now moving on. My thoughts on the upcoming market. I've been listening to a lot of opinions of fund managers and everything like that, and what worries me a little bit is that the run-of-the-mill analysts and money managers are a little bit bearish. So I've noticed this pattern over the last 10 years or maybe longer when well-known money investors, when they get bearish, but the run-of-the-mill money managers, the ones that are actively managing money for some of the big banks and investment firms, then they come on the news or they get interviewed on shows, they're usually bullish. They're like, I'll see you next year, the market will be higher. While some of the bigger names are like, this is systemic risk, blah, 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 it's a shock to the system, money printing, negative rates, trouble ahead, red flags, things like that. And they're predicting, more of a doom and gloom scenario. So the run-of-the-mill investors money managers have actually been right. So, it's very difficult to figure out the situation here because everyone's bearish. Now, there's two things, right? So there are two how would I call them? Two measurements. All right. One of them is the run-of-the-mill investors. When they're bearish, right? I wanna be with them more because they manage more money, for one, and they seem to be right over the last 10, 15 years. Ever since the housing crash. However, they're turning bearish from what I've been seeing, and they're saying, from their own analyst teams and for their own reasons, that things are not going to be looking good, even though the Fed is throwing everything in the kitchen sink, as they say. To quote some of these guys, that's their expression, at the problem, right? And artificially or not stimulating and elevating the asset prices, namely the stock market and the bond market and every other market really that people really depend on and that it's crucial for the financial system. So there's so many things that go against each other, right? So the things that the Fed are doing, the Federal Central Bank of the United States, the things that the central bank is doing is definitely pro-market. The contrarian indicator of the big names being bearish is also another bullish sign. But the run-of-the-mill investors also being bearish is a bearish sign, and the fact that the economic numbers are going to be so weak over the next coming months, for many reasons, is also a bearish sign. And the fact that we're at such high elevated levels near the all-time highs is also a bearish sign. So there's bullish signs, and then there's bearish signs, and it's really hard to make out what's going on here. So I'm still in the bullish camp at the moment, just because I don't want to go against the sheer incredible amount of money that's been created to deal with this problem. All right. So I mean, I really fear missing out the trend, because I'm more afraid of the inflation that it's going to create rather than the deflationary forces of the sell-offs and people needing dollars for whatever, to pay off loans, margin calls, pay rent, I don't know, whatever. Or hedge funds, they need dollars, right? And everybody really needs dollars. Everything's priced in dollars. So I'm not afraid of that as much as I am afraid of the central banks overdoing it and printing so much money out there in an environment where there's a supply constraint, that it's going to lead to inflation. I mean, that is the recipe for inflation. Okay, it's extra money supply, right, and limited production. So if you introduce money supply but the production keeps going up, then everything kind of moves in tandem. But if you look at every single hyperinflation out there, there's always some kind of supply shock. All right, so whether it's trade, whether it's production in the country, of the issuance of the currency, okay, whenever you look at it, there's always some kind of supply shock for whatever reason, and the money printing comes to try to make up for that, but it just feeds gasoline to the fire, and then we get inflation. We get some kind of inflation. I'm not saying hyperinflation, maybe just high inflation. So I'm really more afraid of the inflationary force. And because I want to protect myself against the inflationary force, that's why I own a lot of stuff. And I even have a little bit of debt. As you can see, I still carry some margin. It'd be nice to get out of it, but I have some debt that I carry that, it gets reduced. Its purchasing power, of the money that the debt is owed in, gets reduced. So in essence, the debt kind of gets silently wiped out a little bit, not in a nominal sense, but in real terms. All right, so so that's the kind of scenario that I'm protecting myself against. So you might think, oh, it's so aggressive to be on margin at this point, and yes, I agree. But if you put it into context of what I'm fearful of, it doesn't really seem that crazy. All right. Now, let me show you how to increase. If you, this is probably a horrible segue, because I totally don't recommend doing a lot of this, although I do it myself. But if you want to increase the amount of margin that Robinhood allows you, then one way to do that is to take some of your stock positions, not literally take them, but look at them, and then sell a call against them. If you have 100 shares or more of any position, it is likely, it's possible that it's eligible for a call sell. So what you would do is you go under, let's take Apple, since I always use Apple as an example, even though I don't have 100 shares of Apple. I have 80. But if I had, I'd be able to do this. So you want to click Trade Apple Options, or on the phone it's even easier to figure out. You just click the Trade button, go to Trade Options, and then click on Sell Call. And you can do a long version. I mean, you can do long term. Like you can sell, go to the expiration date. You see the expiration dates on the phone. You can scroll sideways. Go to the expiration date and just go far out. I mean, if you want to get more money, more margin that you were able to play with, you can go far out, like I don't know, January 2021. How about that? And then what you would do is select something that's over the strike price, hopefully, so you give yourself some room to run. And let's say a 360 call or a 350, and then you would sell that call. You would automatically be credited $13,055, And what you're gonna see is that your available margin is going to increase quite substantially. I don't know exactly by how much or what the formula is I think maybe double the amount of the premium probably, or something similar. But and if you do this to a lot of your positions, you're going to find out that you have a ton more margin to play with. Now, what you do with that margin, it's very tricky. I mean, you don't want to over leverage yourself, especially if the market has a correction. I mean, that's going to be very dangerous. You could wipe out your entire account. So just be really careful what you do. But if you really want to go the risky route and you want more money to operate with, maybe you have a small account or something like that. And well, obviously small is relative. But if you have a smaller account that it doesn't mean that much to you, then you might want to try this, and you can make a lot of money really quickly, because if your margin is over 100% of your holdings, I mean, you're making more than double the gains, even if you just invest in the VOO or the SPY or some kind of market tracking index. You'd be making double the gains of everybody else, and that compounds, right? So if you make double the gains in a year, let's say the market makes 10%, you make 20%. Obviously, you have to pay the the interest on the margin, which is 5% per year. But let's take that away for a moment. Don't worry about that. So let's make the numbers bigger so it's not as relevant. Let's say market goes up 20%, then your account goes up 40%, right? And if the market goes up another 20% from there, okay, you would go 40% from that bigger total from last time. So instead of 40% up from $120,000, if you start out with a $100,000 account, you'd be going up from you'd be getting 40% from $140,000 account. Okay, so it compounds on itself. So if you do well, I mean, you can really compound some crazy returns, just some insane numbers. And that's just doubling. And if you more than double your margin, right, if you play your cards right and you can maneuver through this sea of risk that I like to call it, then you can come out on top really, really strongly. Okay, I can't warn you enough how risky it is to work with margin. Even if you really want to do it, I would start with small accounts, and sometimes the interest might be higher than your returns. So I mean, really be careful. And when you're playing in markets, play with money that you're not afraid to lose. I mean, I do believe that you need to diversify your wealth, and you should have some stocks as well as other assets like gold or home or a house or something like that. But make sure that you diversify properly. And when you try risky stuff like that, just know that you could lose it all. And you're going to be the only one responsible for losing that money. So it's on you. All right. But you know what? I believe in you. Okay, so good luck with whatever you decide to do with the markets. I'm over here trying to get to $1 million with this account. I might put some more money in there soon. I haven't added money in like half a year because, I mean, I've been unemployed, so I don't really have any money right now to put in anyways. So it's been a long time since I've added money in this account. That's why it's growing so slowly, but there's still some return out there, so I'm pretty happy about it. I'm almost up to new all-time highs. I was almost up to 90,000 at one point. So I'm trying to get back there. I'm about $7,500 away from that mark. That'd be a nice moment if I scored an all-time high. I'll be really happy about that. But we'll see. Maybe there's another second crash. Maybe this is just kind of like a double top like we had in 2008. And that would hurt. It definitely hurt. But hopefully I'm smart enough that when things settle down, I leverage up and I swim out of it stronger than anybody else. Okay, I'm going to stop talking now. Hopefully you found something useful and entertaining in here. I'll probably make another video on Thursday. All right, I think that's it. Oh, I almost forgot. If you watch this all the way through, let me know who you are by typing down below the word margin. Okay, today's word is going to be margin, so I know who you are. You watch this. I want to know the people that watch these videos all the way through. All right, that's it. Peace out.